Welcome everyone to HueFin News. Today is October 29, 2018. As you probably can tell from the thumbnail, IBM buys Red Hat. Is IBM stock a buy now? We're going to look into that today as a part of this video. But before we do, as always, make sure you guys go ahead and like and share this video, because we are literally the only organization that's giving you price predictions, the news according to the charts without any confusion. Once you look at this particular price chart for IBM, you all will see how it is not confusing, and we're still able to predict precisely where these stocks, cryptocurrencies, commodities, and/or bonds, forex, whatever the case may be, you're able to predict prices without any confusion. And we do appreciate you all coming to this video today to watch. And if this is your first time, go ahead and subscribe to this channel as well, because we are the only news organization that is giving you all the news according to the charts. So now, this is an article by the Motley Fool. Title reads, IBM scoops up Red Hat for $190 per share. So since IBM bought Red Hat, now the question is IBM a buy for us? Okay, so what we're going to do, we're going to dive into this article, look into some of the questions, some of the statements that are made in this article, and then we're going to look at the price chart to see if it's now a buy in IBM. Okay, so this is an article written by Ashraf Issa. It was uploaded today, October 29, 2018. As you all can tell here from the first sentence, on October 28th, IBM announced that it will be scooping up Red Hat, which was described in a press release announcing the deal as the world's leading provider of open source cloud software. Now, as we go ahead and look down, you can see that Red Hat shares peaked at $177.70 per share back in June. Okay, now before pulling back sharply after the company issued a tepid guidance from colleague Leo Sun, the shares closed at $116.68 on October 26th. That's a 34% drop in price from June all the way to October 26, 2016. Now, since IBM bought Red Hat today, they will be buying Red Hat for $190 per share, which literally is a 63% premium from Friday's close and at least 7% premium from the 52-week high that it was seen in June. So either way it go, those stockholders in Red Hat are definitely faring out quite well from this announcement that IBM is going to be buying Red Hat for $190 per share. That's only if those stockholders were able to hold on to these stocks for Red Hat while they endure that 34% drop. It's going to be an all-cash deal. The press release records they were funded through a combination of cash as well as debt. Okay, so that's one thing that you all need to pay attention to as we go throughout the chart analysis, is this word debt. So as we continue to look down, you can see that IBM business has been relatively growth challenged for a while now. After delivering a few quarters of modest year-over-year revenue growth, the company reported a 2% year-over-year sales decline last quarter. Analysts expect the company's sales to decline by 3.2% in this current quarter for IBM. IBM's revenue only grew about 0.7%, even though the sales are expected to decline by 0.7% in the following year. And this is a chart that the Motley Fool has, and you can see here, right here at the 0% area, that they have literally been negative year over year on their revenue growth. Okay, only a minor time period, maybe 2 quarters, that IBM have seen a positive revenue growth in its business. As a whole, you know, IBM hasn't seen good growth, but one of these sections in IBM is this cloud business, which is the main reason why they probably went ahead and bought Red Hat. In the third quarter, the earnings released, they turned in $19 billion in revenue over the last 12 months and grew by 20% over the same period a year ago. So definitely the cloud business is seen as a huge growth opportunity for IBM, which possibly led to them buying up Red Hat. Companies said that the acquisition of Red Hat will accelerate IBM's revenue growth gross margin, and free cash flow within 12 months of closing. So they are planning on at least having increased growth, gross margin, and free cash flow to occur within a year. Now, a lot of people who are in IBM definitely are concerned with the dividend that has been increasing over the last couple of years. And according to the press release, it represents a total enterprise value of approximately $34 billion, and it wouldn't derail Big Blue's dividend strategy. It also will support a solid and growing dividend. So as we look at this particular chart that that Motley Fool provides, you can see here, ever since 2010, we have seen a steady increase in IBM's dividend. And by the purchase of this particular company, they're trying to calm the fears of a lot of the stock participants, stock market holders in IBM, that they're still on plan to support a solid and growing dividend. And hopefully it will not derail Big Blue's dividend strategy. Now, that's all hearsay right now. It definitely needs to pan out over the next year or so. Lastly, IBM expects to close this deal in the latter half of 2019. So there's still a lot of questions in the air as to whether or not IBM is going to be able to sustain some of the revenue, some of the growth that has been losing previously, and they're trying to offset that by increasing their leverage in the cloud business, which is the main reason why they went ahead and bought Red Hat, okay, because they understand that this was literally one of the only areas that they saw growth from their perspective in the business was through cloud business. Now, with the debt portion, IBM definitely needs to try to minimize the debt that they are going to increase once they actually buy Red Hat, because that is a negative that can be seen in the market for a lot of the stock participants, because it can lead to some defaults or even the ability for credit rating agencies to decrease the credit rating for IBM. Okay, so that is something that you need to keep in mind for IBM. Currently, once we look at this particular price chart, we're going to see some huge indications that definitely needs to be identified in IBM. So looking at IBM right now, this is the weekly chart for IBM, and according to the article that we've just read, yes, with the declining in sales in IBM, you can see as to why the market has been in a decrease. And currently, IBM is trading right here towards the lows that it's seen around 2016. So IBM hasn't been trading around that $120 area for 2 years. It's been trading above that particular price. And even over the last couple of weeks, as I zoom in, you can still tell here that the last couple of weeks have been very severe to the downside. And as I zoom out, you can still see here that the support line for IBM continues to be maintained, and we're literally trading there right now. So the question is IBM a stock right here around that $120 area? It has bounced there multiple times, so you definitely need to pay attention to that. It acted as resistance here during the 5th of November of 2007. And again, you can see here it was acting as resistance during the 2000 year time period. So right now is definitely the opportunity to try to research IBM to see if it is a buy right now. The weekly chart definitely shows you that everyone understands that $120 has been maintained as support previously back in the background of this particular price chart. So again, we are going to look at that as well. So that is a positive in IBM to at least hold that support area. Looking at it on the monthly chart, let's see what the monthly chart looks like. This is the monthly chart for IBM, and again, you can see that $120 is very key. Now, one of the concerns I do have is the fact that this current monthly bar is quite huge. We have not seen the spread of this particular bar in quite some time, maybe here on the 1st of October of 2008. So definitely it's not too positive that IBM is a buy once you look at the monthly chart. And definitely I could see it if we just go by the monthly chart that IBM can come all the way down to 110 or even $100 per share flat even. Okay, so right now if I look at the monthly chart, I would have to agree that this weakness is not done. But once you look at it on a weekly chart, you can see that yes, we could see some minor movement to the upside, and literally I'm just talking about maybe around $130 per share that it can move to, or maybe even 140 if we get a lot of excitement in this particular market. But that's about it. I don't see overwhelmingly that this particular stock is a buy. It has some potential to move to the upside, and that's why I identified $130, maybe even 140 if we get some increased volume to come into the market. If that volume does not appear throughout this week, then definitely IBM will continue to move to the downside. So today is Monday, the 29th, start of a new week. So at the conclusion of this week, we will need to come back and evaluate whether or not IBM is a buy, because how it concludes this week would definitely let us know if the market participants are definitely willing to hold support around that $120 area. So as of right now, just need to be on the lookout. IBM is a stock to watch because we need to see if it can hold support. But if you look at it on a monthly chart, it is not ready for higher prices. Definitely something that just needs to be on the sideline and just looked at from a distance before actually jumping in. So what do you all think? Do you guys think that IBM is a buy? We have identified very key support areas. It is now touching support from 2016. So those are two positives that we are looking at currently for IBM. But again, when you look at it on the monthly chart, it is definitely showing us that more downside movement is still in store. So what do you all think? Do you think IBM is going to continue to move to the downside, or do you think it's going to hold support at $120 and move to the upside? Okay. So let us know your thoughts. Let us know your opinions in the comment section of this video. And as always, make sure you guys go ahead and like and share this video and let everyone else know how easy it is to do price analysis according to the charts, to give y'all news according to the charts. And as well, make sure you all go ahead and subscribe to this particular channel too, because we will give you all updates and notifications on all the stocks that we do cover ever so often. And again, our analysis for IBM is just to literally be on the watch for it. Long term, we're still looking for this particular stock to move to the downside. In the short term, we're looking for IBM to possibly hold support at 120 and move back up towards $130 per share. Make sure you all maintain your profitability. I will talk to you all later.